Hello, dear all. Let's add value to your knowledge account today. I'm Dr. Bharati Sunil. Welcome to our Finance and Accounting Academy. Today, we are breaking down the most important accounting terms you need to know in a very simple language with real life examples you can relate to. Whether you are a student, business owner, or just curious, these basics will help you to understand and get a clear picture of how a business is doing. Understand these basics will help you not just to pass your exams, but also helping as building blocks, which will help you to speak the language of business. In this video, we are going to discuss some basic accounting terms which are often used in our daily life. Let's start our first video of this basic accounting terms series. Basic accounting terms, everything you need to know. After going with all the 44 terms, you will clearly understand what is accounting language. Here I have covered 44 different terms, which will give you a clear picture of what exactly accounting terms are. So let's start with the first term, business. What is business? Any activity what we are doing, whether it is selling of goods or manufacturing of goods or giving any services with a view to earn profit is called business. Yes. Next, business transaction. Any event involving money or value exchange. Already we have discussed about these business transactions in our previous video. But for our present video sake, what is business transaction? Business transaction means whatever the amount we are paying after receiving a particular service or product. Okay. So here what example is given? Selling goods for rupees 1000. When goods are sold to the customer is paying the seller rupees 1000. Here, what are the transactions that got involved? Selling of goods and paying cash, right? There are three type of business transactions. One is cash transaction, the second one is credit transaction, and the third one is non-cash transaction. What is cash transaction? When goods are sold, immediately you have paid cash to the seller. So it is called what? Cash transaction. Then what is credit transaction? In credit transaction, goods are received or services are received, but the payment is postponed to the future. Means this can be happened only with the agreement of buyer and seller, right? In case of credit transaction, here the buyer is given some time to pay that amount, right? So these are called future payment transactions. Now coming to the third one, non-cash transaction. Here, what is non-cash transaction? The question of payment or receipt does not arise at all. Means here, either the payment or receipt does not arise. Here we can take the example of depreciation. We have purchased one machinery. My machinery's life is 5 years, and the performance of the machinery will not be the same from the first year to the fifth year, right? As the time goes on, the usage of the machinery, the performance of the machinery, the condition of the machinery will be deteriorating, right? So again, we have to buy another machinery after 5 years, right? So what you will do every year, we'll keep some amount aside so that we can purchase another machinery after 5 years. Is it clear? So what is depreciation? The decreasing value of the asset that we will calculate, and we will adjust to that particular total asset life, and we will keep that amount aside, right? So what is this called? This is called depreciation. Next, loss due to fire. If any loss is occurred in the godown and some materials are lost because of this fire, we'll show this as book entry only. Okay, so in this particular non-cash transaction, depreciation or loss due to fire are not payments or receipts, it's only book entry. Is it clear? Yeah. Next, we'll come to second term, that is called sole proprietorship. In the sole proprietorship, only one person will start the business and he will only bear all the risks. If the profit arises, he will enjoy the total profit. If the loss occurs, he has to bear all the losses. We can quote some examples here. Ramesh owns the Kirana stores. If a Kirana store is started by Ramesh, he is the only person who started the Kirana store. So he's called sole proprietor. In the same way, if the photo studio is started by one person or one freelance graphic designer or one consultant started his own business or some small bakery which is started and owned by only one individual. Okay, in all these cases, the person who started business is called sole proprietor, right? Next, partnership. The extension of sole proprietorship is called partnership. If the business is not manageable by only one person, either in the form of investing capital or operating activities, then what they will do, they may add another person or two or more persons will be involved in the business. So what is partnership? When two or more individuals, they share their profits, they share their losses also. Okay, so in partnership, what is the advantage here? They will have the advantage of having sharing of resources and also expertise, right? Here we are having examples. Law firms or accounting firms run by partners. You can see some chartered accountant firms, right? You can see some law firms. You can see some accounting firms which are run by some partners. Next is some medical clinics. We can see different types of hospitals, super specialty hospitals, right? So that hospital cannot be established by only one person. Then what they will do, they will form one partnership and start a business called partnership business, which is started by a group of doctors, right? Next, third one, joint stock company. What is joint stock company? A business organization registered under company law, and it is owned by shareholders with limited liability. Here in sole proprietorship or partnership, liability is not limited, but here in the joint stock company, shareholders liability is limited to the extent of their investment. Okay, it is suitable for large scale operations. When our business wants to have large scale operations and we require more capital, then joint stock companies are more suitable. We can have some examples here. Reliance Industries Limited and Tata Motors Limited. You can also have the example of Indian Oil Corporation Limited, that is IOCL, right? Next, what is capital? Capital means whatever the money is invested by the owner into the business. Say, for example, now you want to start one business. So if you invest rupees 50 lakhs in your business to start, what is this 50 lakhs is called? This 50 lakhs is called capital to start your business, which is invested by you, and who is owner of the business, and you are the owner of the business who invested capital in the business. Equity. What is equity? The amount whatever is belonging to the owner of the business after paying off all the debts relating to the business. Means any right or claim to assets in a business. Next, drawings. What are drawings? Money or goods taken by owner for personal use. Say, for example, here, if a rice mill is started by Mr. A, and Mr. A wants to take some 2 tons of rice for his personal use. Okay, then what is this called? This is called drawing. Drawing in the form of goods, right? And also, Mr. A invested some 2 lakhs in his business, and now he wants to withdraw some 20,000 for his personal sake, right? So in this case also, it is called what? Withdrawal of cash. Next, we are coming to the very important term in the business. What we use is called assets. What are assets? Any resources owned by business, either owned in the form of property or any amount used from others. I will explain these assets in the form of fixed assets, current assets, tangible assets, intangible assets. Okay, what are fixed assets? The assets which are acquired by business and which are used for more than 1 year. Means these assets, say for example, we have purchased one car and we are using that car for our business purpose, which is not bought for one bought and sold within 1 year, right? Which is used in our business for our normal course of operations, and we will depreciate this car every year because the car life is say for example it is 10 years, so we have to again buy another car after 10 years. So what we'll do, we'll depreciate every year based on the life of the asset, right? And plant, machinery, furniture, buildings, all these assets are purchased for our business sake and used in our business, and after certain time, if there is any like a non-performance of machinery or something else, we can sell later, right? But whatever the assets we are holding in our business for more than 1 year, means the benefit of which is received for more than 1 year, are called fixed assets. Okay. Next, current assets. What are current assets? The assets which are not meant for long term, which are only for a period of 1 year or less than 1 year. Means we can convert these current assets into cash within a period of 1 year. So what are the examples here? Sundry debtors, cash, and stock. Okay. So you all know sundry debtors means the persons who are owing to our business. They are called sundry debtors, and the cash or bank balances, whatever we are having, are also called current assets. Tangible assets. What are tangible assets? Which we can touch and we can see. Say for example, if there is, we are owning one building. Can we see that building? Yes. Can we see our machinery? Yes. Can we see our furniture? Yes. Okay. The assets which we can see, we can touch, and which are having physical existence are called tangible assets. Okay. Next, intangible assets, which cannot be seen or felt or which do not have any physical existence. They are called what? Intangible assets. Goodwill. What is goodwill? Goodwill means a business product can be sold with a higher price compared to its normal price. For example, you people buy Reebok shoes or iPhones, okay, or any like product which is having its brand value. Okay, that brand value is caused because of its goodwill, are called what assets? Intangible assets. Yeah, in this particular current assets, I have used one word called stock. What is stock? Goods available for sale are called stock or inventory. So here stock we can explain in three forms. First one is raw material, second one is work in progress, third one is finished goods. Generally, school uniforms are purchased by students after school reopening. Okay, so who are selling these school uniforms? First, what they will do, they will buy raw materials. Okay, this raw material will be stitched in the form of school dress. So what is raw material? The cloth material is called raw material. And what is the finished good? Finished good is stitched uniform, right? So in between these two, there is another process that is called work in progress. Means when the material is bought, that material will be first used to stitch. Okay, before stitching that, they will cut the material and they will do all the process. So what is that process is called work in progress. When this particular stitching is completely done, then it is called what? Finished goods. Okay. So this uniform, first it is shown in the form of raw materials. Then it is before converting into finished goods, it is called work in progress. And after completely stitched, it is called finished goods. Is it clear? I will explain debtors in four forms: trade debtor, loan debtor, debtor for assets sold, and income debtor. So first I will explain you who is trade debtor. Trade debtor means when we are buying and selling, we are called trader. Okay. Say for example, we are buying fruits and we are selling fruits, right? So here we are not manufacturing, we are only trader and we are selling our fruits to some hostels. Okay, so hostel people will pay our money every month ending, right? So here hostel people are our debtors, right? Who will be paying our money after 1 month. Is it clear? And second one, loan debtor. In this aspect, we gave loan to different persons and Mr. X is among them and Mr. X will be paying our amount after 6 months. Okay, so here why we are calling Mr. X as loan debtor? Because he took loan from us and he will be paying this loan after 6 months. So till we receive that amount from Mr. X is our loan debtor. Clear? Now coming to the third one, debtor for assets sold. Say for example, we are Maruti Suzuki manufacturers, right? So we are selling assets to different businesses, right? So what the business people will do, they will buy cars from us and they will pay that amount in future, right? So we gave them some time to pay amount of particular cars, right? So for this, in this aspect, whoever are purchasing cars from us, they are called debtors for assets sold. Income debtor. Here we have provided some services, but the amount payment is still pending. Okay. Say we are letting out our flats for rental purpose, but still our amounts are not received. In this case, whoever are our tenants and who are supposed to pay our rents, they are called our income debtors. Yes, next liabilities. Amounts owned by business to the creditors or outsiders, excepting the amount to be paid to owners. Here in liabilities, we are having two. First one is internal liabilities and the next one is external liabilities. So amount which business has to pay to its owners means who invested money in the business. They are called owners of the business. So whatever the amount is to be paid to the owners, that is called internal liability. That is called what? Capital. And also in our business, if we are having some accumulated profits, means what are accumulated profits, whatever the profits we are earning, and out of that profits, if some amount is paid as dividend, still whatever is remaining with us is called accumulated profits. So capital and accumulated profits are our internal liabilities. And coming to the next one, external liabilities. So what are these external liabilities? Amount which the business has to pay to outsiders. Say for example, now our business took loans from bankers or we have purchased some assets and still we have not paid amount to our sellers. Okay, so in these two aspects, these two are called our external liabilities. So amount which business has to pay to outsiders are called what? External liabilities. Creditor, a person to whom the business owes money, means amount to be paid to suppliers or creditors, right? Say for example, we bought some materials from our supplier and we have not paid that amount immediately, means we have purchased on credit. Okay, so now how much amount is pending to our supplier? Rupees 8,000. Okay, and in the second example, we have purchased goods from Mr. X on credit basis, right? So means here it is not cash purchase, it is credit purchase. In this credit purchase, still amount is pending from our side, which is to be paid to our uh, seller of particular goods, right? So in this transaction, we are owing money to Mr. X. How much of money is to be paid now? Rupees 1 lakh. So who is our creditor now? X is our creditor. Okay. Again, in creditors also, I will explain you that there are four creditors, four different types of creditors. First one is trade creditor. Okay. Who is trade creditor? Here we are buying and selling goods, right? So we are wholesalers of particular business. Okay. So what we are doing, we are buying all the products and we are selling to our customers. But when we are buying all these products, we are buying on credit basis and still we have to pay money to them. So here what the term we can use? Trade creditor. Means to whom we are owing money for our purchase of goods. Is it clear? Now coming to the second one, loan creditor. See here we have taken loan from some financial institution and the amount still pending from our side and we have to pay that amount to them in future. So who is our creditor here? He is called, that institution is called loan creditor. Means we are owing money to our creditors in the form of loan. Okay, coming to the third one, creditors for asset purchased. Okay, say for example here, we have purchased some building or furniture or machinery or cars, whatever it is, and we have purchased all these on credit basis. So amount is to be paid to them in future. So here what term we can use? Creditors for assets purchased. Okay, we are owing money to them, right? Next, expenses creditor. So creditors to whom the business owes money for any services rendered by him, right? Salaries, whatever we have to pay to our employees are called salaries unpaid. Okay, and also to our selling agents or selling sales people, if we have to pay any commission and that is pending, then that is also called what? Unpaid commission. So whether it is salaries unpaid or commission unpaid, in these two cases, they are called our expenses creditors. Thanks for watching. If you found this helpful, don't forget to like this video, subscribe for more accounting lessons. Thank you.